We do have a chart here on the Bloomberg terminal indicating just how cheap Chinese stocks are getting. You say in particular Chinese internet stocks are a buy. We've got the Hang Seng Tech Index 60% off since its peak. But you do have to wonder, where is the entry point? We've been hearing this cheap story for a while now. Is there a risk of catching a falling knife?
Yeah, Paul, we've been kind of waiting on the sidelines at Eastspring for a while, and that's why we're making the call now that we think that a lot of the bad news is baked into the prices at these levels. So we think the mega cap internet platforms that sold off so heavily on regulatory concerns are looking very interesting. We're also seeing other pockets of the China market that are interesting, whether that's domestic brands that play into millennial spending, things like cosmetics and dairy. We see more of a made in China type of mindset among consumers and the whole domestic consumption story. We also like renewables. We think that leans very heavily into the government's strategic initiatives. So there are pockets of opportunity in China, even though all the news seems to be so negative right now. There are things that we're looking to buy at Eastspring because we do see opportunities. And while it may feel contrarian or not very popular right now, in 2030, we'll look back and think, why didn't we buy China now? This was a great opportunity.
So you're getting long on China. What particular names do you like?
I'm not actually able to speak to specific names. What we do like, as I said, are certain sectors or certain thematics within China. So that's domestic consumption, that's the local brands, that's things like clean energy. We like manufacturing upgrade types of stories, so more like high-end IT type names. So across the spectrum, there are many pockets that we're interested in. We're still watchful on the property space. We think there may be more legs down among the developer stocks and in the bond market. So we're being cautious. We're telling clients maybe give that a little bit more time for the stress to work through the system before we go long into the developer names. We think it's too early for that. But there are some unique opportunities within the China market. And as we know, it's such a diverse market. It's a very liquid market, too. I don't think people really realize that. And so there's a lot to buy for investors.
When it comes to other economies and markets, aside from China, where we're not seeing that much when it comes to the inflationary pressures, we were following earlier today prices for palm oil, soybean oil really rallying, given, of course, the food crisis and food supply chain disruptions. How is this going to be felt through central banks and what they do next across Asia and the implications of that when you're really trying to allocate your portfolio?
Yeah, we are starting to see the inflation uptick within the Asian region. It hasn't been as extreme as what we've seen in more developed markets. The general thinking is, look, the Asian central banks have been a little slower out of the gate than some of the, ECB and the Fed in the U.S. But we do think that the inflation will work itself through the system. It's not as severe as in other parts of the world. But that said, we are mindful. So we're looking to play this through things like dividend yield stocks. So we're looking at the Asian REITs in Singapore and Hong Kong, where you're getting a really good yield. And we've done some studies to show that in the last 4 rate rise scenarios, that the REITs have actually been able to pass through the cost to their tenants and to increase the rents that feed into their revenues. So I think that there are opportunities within Asia. We're also looking at the reopening. So tourism is 4.5% of GDP in the region. In markets like Thailand, it's as high as 13%. Hong Kong is 10%. So, there are reopening plays, whether it's, right. in Thailand or in Singapore.
What about growth plays, for example, because it's big tech earnings week here in the U.S., but at the same time, of course, we know those mega cap tech have been challenged. And in Asia, you have the likes of the Korean market or the Taiwan market.
Yeah, so the growth plays have sold down. The market has been more of a value-driven market recently, and that really does play into what we do at Eastspring in large part, is looking for companies that look cheap relative to what we think they're worth. So we do have good exposure to the Korean and Taiwan tech names, the large cap, mega cap tech names, and we do think that long term that those businesses will be winners. In Taiwan in particular, you're getting pretty good dividend yields as well. So as I said, in an inflationary environment, being able to collect that dividend along the way is very attractive.